Hello, friends of Komodo Platform. I'm Giuliano, and it is the 23rd of November. The year is 2021, and I'm here for a long-term video price chart. That's right, long-term price chart video. I'm here to share the screen. I'm going to use the getaurox terminal, and in there, we're going to use the Bittrex data. So we have all of the data from starting back in March of 2017. I'm really excited for this video. I made one. It's about an hour long, just shy of that. So I thought, what if I make a short version, a quick version with the main salient points that everybody could take away a lot of value while at the same time not having to spend as much time. Either way, maybe you're listening to this, watching this in the 1.5 or 1.75x speed. That's cool. If not, that's fine. Normal speed might be what you need in order to get a clear understanding of what I'm trying to offer here. So this is the monthly time frame of Komodo Platform price chart. Just breathe that in. The first thing I want to recognize is we have been in this downtrend for 3 years, 36 bars, 3 years downtrend. Okay, so one of the main themes is going to be this waterfall effect here. Okay, and the waterfall effect generally in this case is going to be this move down, pretty, trending move down, even though it looks like a zigzag, but it's trending. The zigzag is a trending correction, some sort of corrective move against the trend, more downtrending, a second one, another corrective move against the trend, and then a third move down. Okay, down here. Providing what in the Neely method of Elliott wave in the Mastering Elliott Wave book is considered as the waterfall effect when you have a complex correction. The complex correction, basically the idea becomes that as the pattern continues lower or higher, depending which direction it's going, as the pattern continues lower, it loses momentum. And so we're going to look at these relationships using Fibonacci tools, okay, extensions particularly. We're going to compare these trending moves. And there are 3 of them with intermediate, what will be considered X waves. Now, previously when we looked, if you want to watch the pirate chain video about the double zigzag, we used a 0 to B trend line. In this case, we're going to use what ends up being a 0 to X trend line. And that's because if you notice here really is a zigzag and then some corrective move and another trending, corrective move, trending. And what we look at when we look at trend line touch points, again, watch that pirate chain video if you want, we will see actually that those are the important areas. And if this is not a B wave, like you might argue, okay, fine, you have an ABC right here, a zigzag like that. That is possibly arguable, but I find this waterfall effect a bit more reasonable, and we'll look at some Fibonacci ratios. And it's so clean here, this zigzag right here. So we're going to use that to our benefit. Yeah, so that's the idea, trending, downtrending moves, but we need to start where the chart starts, and the chart starts back here. And we also want to look for what is the longest and most volatile mono wave, and that's this one right here, okay? It takes the least amount of time to go from one point to the other, and it's the biggest price distance. This one is pretty big price distance too, although it is less than this distance. Also, it takes longer to form, okay? And it has more intricacy, more subdivisions, okay? There's 3 mono waves roughly here, whereas there's roughly 1 going up there. Now, the other thing is this intermediate thing here corrects this up mono wave against that trends, and it takes a more complex complexity, intricacy there. Therefore, it's more likely the corrective move Therefore, we can say that actually the overall trend is in up direction. And that means this is either an A wave, a C wave, which it's probably an A wave because we're just getting started here, or a 1, a 3, or 5 wave, which are all the trending directions. A, C, 1, 3, and 5 are all the trending directions in Elliott wave theory. So that means we are going up, down, and what happens after down is up, right? What happens after up is down. What happens after down is up, right? Okay, that's how it works, with some sideways in between, you know, like as part of the up and the down. Now, when you have this type of move here, we could say it's an impulse, but more likely it's a zigzag, a 1, 2, 3, sorry, not zigzag, correction. An impulse is a 5, a correction is a 3. This looks like a 3. And really, actually, because it retraces so much, it might not be a zigzag, it might be a flat, especially because here, this wave here retraces basically this wave here. And they're about the same like that. So in that sense, this might be a flat pattern. We'll use a Fibonacci retracement to find out. Roughly, we retrace about 81%. That would be a flat pattern. Okay, it's a stronger version of a weak B wave. Okay? A normal B wave would be between 81% and 100% of retracement, but it only made it to about 81 or 78.6. That's fine. Okay, so that's the idea right now, is that we have actually up here an A wave up here. That's as like a bigger move. This combination of move here is an A wave, is the idea. That's the theory. And then this down move here is all one move, and it is going to be considered a B wave. And then we're going to need to find our C wave. So that's basically what's happening here in this video. Really, we've determined that this is the trend, so that it's probably the A. And because also this move retraces way too much, it's not even a zigzag. A zigzag would be retraced at most 61.8% in the B wave, and then the C wave would continue higher than the top of the A wave, at least by a little bit, even if it was only by this much, but it would still have to go fast. Now, the fact that this wave here, what we're calling a B wave, goes lower than the beginning of that A wave over here, means that it retraces it more than 100%. So not only is it a flat because it goes to the level, you know, of where it came from, that A wave, but it goes beyond it. So it retraces more than 100%. So let's make sure that it's not too big and that it does make some sort of sense. So we start there, we retrace Fibonacci tool, and we see, okay, it doesn't quite hit the 1.236 retracement. One thing that Glenn Neely says is that as long as it doesn't break beyond the 1.236, then it still has the potential to retrace the previous wave, in this case, the B wave. The C wave has the potential to retrace the B wave more than 100%. So it could actually make new all-time highs. But my estimation is that's less likely, especially because of how much it got close to the 1.236. And I'm gonna be cautious and conservative. And so we're gonna have different levels here. In TLDR, we're looking like 25K to 40K. But anyway, okay, there's another story, 35K, whatever, 25 to 35K. That's a TLDR. Okay, so what do we do next? This is turning out to be longer than expected. Well, not expected. It needs to be a certain length. I need to get through some ideas here. So, okay, so we have this A wave here, a B wave here, which didn't quite retrace 1.236. And we're wondering, is it even over yet? Well, we're gonna use some trendline touch points to find out. As you saw already, there is a parallel channel that's made with the candles and the wicks. And so on some level, we're still in the sideways motion trying to exit this big channel. But when we use trendline touch points on the closing prices, so it's fine, it's fair to say that we still have a bit of moving to go before we start finding fresh air, let's call it, okay? On a closing price basis, we can use trend line touch points. So this is what ends up being quite interesting, okay? What we have here is, well, depending on how you want to play it, okay, we said there's probably an ending here of this pattern, this weak B wave into the C wave. The C wave is also impulsive, and so this first A wave here, A should actually be a 3, and then a 3, and then a 5 here. This 5 is pretty short compared to the first one, with the first 3 here, but that's just what it is, if that's the count. If this is an A wave, and that's the theory right now, is we have an A wave to here, now a B wave to here, you'll see why, and then a C wave, and we're gonna determine, is the C wave gonna be equal to the A wave in price and time, in price, and what type of time would it be if it's a different time? So we use trendline touch points. We start this B wave here. Previously, we had used a B to B trend line, but if we're using B to B trend line, that's going to be here, and it gets cut off right away, and it doesn't really work so well with this whole big move. In which case, we use again A, B, C down here. We can take the C, and we can say there's a good likelihood, boom, that this is probably a C as well. And it turns out that we're going to use a 0 to X trend line. And these are going to be, guess it or not, they're going to be the X waves, which are intermediate in these complex non-standard corrections, where we are looking like we have some sort of ABC X, probably ABC here, X and ABC here. However, it doesn't have to be ABC, but it looks pretty trending. If you notice, the angulations are quite the same throughout these trending moves to the downside here. Okay, so there's that. And then also, oops, I'm gonna get rid of that. There is, just this X wave kind of sideways and up style for the X wave. So, it makes sense that very well could be. And then we follow this waterfall effect, and we start to see, okay, there's a good chance. So let's do that. Let's follow the waterfall effect. Let's take the first zigzag. Firstly, it's a 1-to-1 zigzag here, 1-to-1, let's call it. So that's fine. And then we'll take this whole zigzag and retrace. So it's a pretty strong move down to be 1-to-1 if we're using a waterfall effect. Now, generally in the Neely method, used the external relationship, and it comes roughly to a 61.8, which would follow a waterfall effect. If we go internal relationship, it moves nicely with the 786, which is a big number in crypto, I find. So 786, 618, it kind of follows that level on an internal relationship. And I also notice a lot of crypto seems to like internal relationships. But anyway, we're working with this internal relationship here. And then if we take the next trending move down and compare it to this first wave, it's roughly a 38.2, which again follows that follows the type of waterfall effect we're looking for. Now, it's not precise in the Neo wave, Mastering Elliott wave. It's a little bit more nuanced than that. You compare this A wave with the C wave, and then you compare this whole move down with the next A wave and then the next C wave. Then you take this whole move down and you compare it with the next A wave and C wave if it is a triple zigzag. But this is a triple trending in my opinion. And like I said in that other long video, this is, let us see a 333, CA 333 correction for 3 years of correction. Welcome to the potential end of the correction, December 2020 in hindsight. because we get this 3x3x3 as a triple type of combination, where we end not on a trend line touch point, but at the end of this third trending move. And then we break out of this, this channeling, and we get to an up and a down to figure out what's next. Now, having said that, we do still find ourselves within this, this other parallel channel, right? So we're near it though. We're near the end to break it out, but we're gonna use this point here, this third three, that third touch point there, not touch point, sorry, that third point here in the middle as the ending point of this whole move down as a B wave. And now we're ready to figure out where is the C wave starting. Maybe officially the B wave ends somewhere here because you have quite a nice impulsive move down here. This looks very trending. And so maybe I would say if we want to be official, it might end even right here on some other count. But this is definitely a very, very important, significant low right here. So that's that. Speaking of CA333, much respect, best wishes to everyone from Komodo Platform working on KMD and the Komodo Platform technologies and all of the community and other projects, ecosystem and related projects that are working so very hard to bring us into this new century as fast as we can. And speaking of which, so I want to recognize that all of this is 3 years downtrend here as a potential B wave. And you know, we're looking at this type of time frame here, you know, up to 2030 type of time frame in order to, and even beyond, in order to find some sort of like, maybe in the life of KMD, we're just at the beginning of the life of KMD, you know? There is a lot of potential here. I don't know exactly what it's gonna look like, but there's a lot of potential here for just this beginning of the first 10, 15 years to be corrective action. Or maybe it just needs this one correction here, and then it's ready to go off to the races around 2024. Maybe that's the case, okay? I don't know, definitely none of this financial advice at all, but it's just something to consider, something to look at. Here's 2030 right here, okay? We're gonna start talking about time momentarily. I'm almost done. You have the basic idea. So before we talk about time, I just wanna talk about price levels, and I wanna recognize here. So we had ABC or whatever trending 3x, trending 3x, trending 3. Now we're getting out of it. Okay, now 0 to X trend line for this triple zigzag or whatever combination this is. There's a chance that this last move might even be some sort of flat pattern, but that's besides the point. Okay. It also is too weak to say that we've really broken this whole downtrend yet. That's the other issue, and that's fine because it looks like we are nearly there, considering where all the channeling was. Now, the other thing I want to look at here, so we have an A, potentially a B, let's call it here, and then a C. Now, where does the C go and when does it go? That's the next question. So first thing we're going to do, we're going to retrace this whole B wave and see where is a reasonable level. The next thing we're going to do is we're going to compare the A wave with the C wave, and we're going to see what's a good confluence. So let's retrace this whole B wave. Boom, roughly there. Here is the 38.2. It's around the 27,500 Satoshis. I'm going to put a horizontal line there, and we will redden you up. No, green you up. We like you green. Okay, that's the goal line. Let's go get it. We'll also put at the 61.8, which is always a reasonable level for retracements that still are weak enough that they don't have to be huge. So I feel like that is a good zone, a good band. That's between the 38.2 and the 61.8. The 61.8 is around that 42,000 Satoshis level, okay? So Mainly though, is this 27,000 Satoshi. That's the main target. Like, yeah, we can expect some 9,000, 10,000 Satoshis at some point, but realistically, can we ever expect reasonably 27,000 Satoshis? And if so, what would be the scenario? And in my opinion, this is the scenario. An A, a B, and a C is where we get this significant move. Now the question is, what type of time frame are we using? Well, wait, sorry. We also want to check this. We want to check the trending move here, the A, and compare it with the C. Boom. That's why I thought this was important, because here you go, 1-to-1. It brings us the C, which is at that 27,000, 28,000 Satoshi level, which is the same as the 38.2 retracement, which I love that. I think that's such a good place to go next. Let's get there. Now, amazingly, 70,000 Satoshis is the 1618 extension of this A wave, but I wouldn't go there. I don't feel like it needs to be that strong, this C wave, especially because the B wave was such a strong retracement against the A wave. Yeah, and not only that, I get the sense that this keeps the price kind of flat over the beginning of this life from for the first 5 years or so. So that's very interesting, a flat pattern, but quite a seesaw of a flat pattern. So let's see this. That's amazing. This is definitely a good price level to look forward to. Next, so that's the waterfall effect for just here. Let's get rid of hue. We're looking at a bigger flat pattern. And it also allows for a flat pattern here that then maybe we get another type of corrective pattern, maybe another flat, or maybe a zigzag or whatever it needs to be, some sort of triangle, whatever it needs to be in order to continue the overall sideways motion for the next number of years. Maybe it's only until 2028, whatever it needs to be, okay? And maybe instead though, it is, the price is going up here and then, oops, is going up here and then it's, maybe this price is never, never coming back above these levels or at all. I don't know. I doubt it though. This is not the way I think it's going. I think it will have some sort, like all of the plays that continue, something like KMD will be around in 10 years. I get the sense that it will be just beginning its whole life cycle, after 5 years or 10 years. So we'll see. And then the other option is, no, that's not the case. So again, none of this financial advice, but just let's take a look. So now we talk time. Okay, Jack talked time very well. So here we go. Let's compare it. There's a few options. Okay, we can have A plus B equals C, in which case it's going to be pretty far away. Okay, we can have A plus C equals B, which will be less far, but still maybe around 2023 in the spring. And then we can have A equals C, which will be around 2022 spring, okay? Meaning in time. So what does that mean? That means, let's say A, starting in March of 2017 until December 2017 takes about 9 months, 9 bars. So we're gonna compare that to C and say it starts here and look for 9 bars. And we're already kind of there. So we wouldn't be able to start it there. So let's just envision us starting it around here. That would take us to about August of 2022. And if we start it, if we start it about here, that would take us to about March of 2022. So, but I mean, are we going to be in March of 2022 at 25,000 Satoshis? It's hard to get that sense, but I mean, a C wave has to be an impulse of some sort. Maybe it's constructed in a certain way, but it's generally an impulse. So I could see that happening, but my bet is going to be not instead of A equals C. I get the sense it's going to be A plus C equals B because B was so long. So I'm gonna call A plus C equals B. But let's find out where each of those is. So here's A. A stops here, plus B let's stop it here as the significant low, equals C, and that would be the one here. So because I stopped it here, it compares this whole length here with itself, which would end up here at this one. So I'm going to put a vertical line at this one, and that gives us A plus B equals C, and that would be in September of 2024, which means it would maybe look, you know, it doesn't have to follow this trend exactly like along the line. It might chop up and down, whatever, but basically it would go to that trajectory, okay? Now, the other option is, oops, let's do it again. A equals A. So we're gonna take A here. We're gonna just start it from here and say A equals A, here's the purple, that's 1. That's August of 2022. That's about the first half of the year, give or take a month or two. So we'll put it there. I didn't mean to do that. So let's take our vertical line and roughly around there and say, okay, fine. And you are, you're this color, okay? And then, no, this color. And then we will take, so that would make you, let's go here, let's go here, and let's go, what did we say? Here. That's A equals C. A equals C. Okay, that's going to be U, A equals C. And then we are going to have A plus C equals B. So here we have this. So B is actually going to be, hold on. So A is here. C, we're just going to say, look, this significant low that we had here in the channeling, that is four, count them, 4 units compared to the 1 unit of A. So that makes A plus B equals 5. And that's where you get this over here. This is 5 units here of this A move. In this case, though, if this is 4, this whole B move down to here, this significant low, then, and this is 1, that means 1 plus 3 equals this whole 4. Therefore, the C would be 3, in which case we're going to come over here and start it at the significant low, which is here. And 3 wait a second, what just happened? That's not. One, and here is 2. So this would be 3. So how did that happen? That doesn't make sense. I don't know what I just did. Let me just reassess this. Nine, 36, 25. We're looking for 25. There we go. It's around there. So that would be, oh, we're there already. Almost. 2023. Oops. And it takes us roughly to the spring of 2023. And we're going to call that the yellow. And so, interestingly, this starting here, 1, 2, 3. Yeah. Okay, that makes sense. Okay. So, oops, undo that. So there you have it. I'm going to change this color. We don't like that color. Change this to this lighter purple. And then we are going to add this orange line. So that is the potential move here. Like, that's the potential move here. March, spring of 2023, or is it going to be? Is it going to be? Is it going to be, you know, spring of 2022 here? That looks wild if that's the case. But I feel like we need to chop around here. I mean, there's a good chance that it might not happen until 2024. I'm going to go with the middle. I like A plus C equals B. And that would be good for me. That's 3 years, 9 months, so just about 24 months or 27 months going this way. And yeah, I'll be here if I can. I hope you do too. Stick around. So now you know, I mean, you can expect this type of move. Is it guaranteed? No, none of this financial advice, but there is a very strong reason now. This is based on reasons, price action reasons, and physics rebounds, up, down, and also price patterns and potentials here. So that's basically the idea. I'm going to leave it off at that. I hope this serves you well. For all of you coin girls out there, I'm wishing you all the best. Send my love. And yeah, wishing you love, peace, and happiness. I hope this one helped. I hope it was enjoyable for you. I hope I didn't miss anything. Until next time, goodbye.